3 days ago, we said Iran broke the calm. 2 days ago, we said the calm came back. Today, we'll tell you what happened next. The market got a peace trade. Stocks ripped to fresh records across the board. The S&P 500 hit an all-time high, up 1.5% to 7,365. The Nasdaq jumped 2% to a record 25,838. The Dow gained 6 and 12 points. That's almost twice yesterday's recovery. And the Russell 2000 rose 1.75%, which means small caps joined the rally for the first time this week. The breadth got better, not just the headlines. Here's what changed. Axios reported that the United States and Iran are close to a one-page memorandum of understanding that would end the conflict. The framework reportedly includes a moratorium on Iranian nuclear enrichment. Iran's foreign ministry confirmed they're evaluating a U.S. proposal. President Trump tempered the optimism late in the day, calling it a big assumption Iran would agree, but markets had already moved. And the move was huge. Oil collapsed. West Texas Intermediate crude fell more than 7% in a single session, settling near $94 a barrel. That's down from 102 yesterday and 106 on Monday. Brent dropped just as hard. 2 days ago, we told you to watch whether oil held above 105. It didn't, and it didn't even take 48 hours. The geopolitical risk premium that drove Monday's panic is now fully unwound. Sector action was the cleanest read on the day. AI and chip stocks led. AMD added another 18% on top of yesterday's earnings beat, lifting the entire semiconductor sector. Nvidia jumped almost 5% on a major partnership with Corning to build optical manufacturing in North Carolina and Texas. 3 new factories, 3,000 jobs. Corning itself ripped 17% on the news. Disney gained over 6% on earnings. The losers? Energy stocks fell 4% on the oil collapse, and utilities lost more than 1%. Now here's the thing that should have your attention. This is the third straight day of records, and the rally has gone from suspicious to overheated. The S&P 500's Relative Strength Index, the RSI, just crossed above 70. That's the technical level traders use to flag overbought conditions. It's the third warning signal we've covered this week, alongside the divergence in transports and the unusual move in Treasury yields. 3 different signals from 3 different corners of the market, all pointing the same direction. The trend is up. The pace might be unsustainable. So what do you watch from here? 3 things. 1. Whether the peace deal actually gets signed, or whether Trump's late-day comments mean Iran walks. If the deal falls through, oil snaps back, and Monday's playbook returns. 2. Whether the chip sector keeps leading. AMD's reaction tomorrow, plus ARM Holdings' earnings hitting after the bell, will set the tone. If chips fade despite the news, the rally is running on fumes. And 3. Whether the RSI keeps climbing or starts to roll over. Above 70 doesn't mean a top. But the higher it goes, the more violent the eventual reversal tends to be. 3 days ago, this looked like the start of a war. Today it looks like the end of one. Markets aren't always right, but they have an opinion. We cover the days the markets actually move, typically a few times a week, more when things get wild. Hit subscribe so you don't miss it. We'll see you next time.